Pips FX. And on today's video, guys, I'm basically going to be breaking down this trade here that we had yesterday at Green Pips FX community, where we had these GU buys, which were later on, we took these buys in the New York session, and they were later on funneled by the FOMC news, right? So first and foremost, let's just clear this, right? So that we can do all of this shit over again, just for educational purposes, right? So if we just look the outside picture of the market, right, we can now clearly see that price had a very good bullish trend, right? High low, right? High higher low, high, right? So price then created a higher low and then came to take out the structural high here, right? And then creating a new, let's just do this, right? So this will term this as a, so we'll just term this as a break of structure, and from this break, price created now a new high, right? But when we look at the internal movement of price, we can now clearly see that this high here was formed by this low here. So basically, we're just ranging from this high to this low, here. Now look at what price does, right? There we are. So let's just zoom in. So price comes down into what's our area of demand, of course, which we were now looking for buys, right? But the way we trade at Green Pips FX Academy, we don't just do this, right? We don't just place buy trades there and the stops below the zone, right? We don't do this. We like to take what's called a confirmation entry. Now that confirmation entries, guys, it's reserved for the premium, but of course I'm gonna touch a little bit of criteria on how to trade from this area, right? So we can now see price came in, attempted to break this, never broke it, right? Only left 2 wicks below it. So this is basically what the concept of absorption, right? And once this absorption or liquidity grab happened, price now made an internal break of structure, made a retest where our entries lied, and then we took price bullish from there. Now this is just the 15-minute view, right? So from this 15-minute chart, we would now go to the 1-minute chart and see what's happening within this area here when price touched now our POI, and we started looking for buy opportunities. So okay, there we are. So this is that area. Now we're now down to the 1-minute chart. Okay, so from the 1-minute chart, look at what happens. So price is technically bearish, right? Because this is just internal price action. Price is bearish. Price creates a low, right? A high, a lower low, lower high, lower low, lower high, and then lower low. Price now attempts, price comes up to this area of demand here and then goes down, fails to take out this low here. Hence what? This right here is a weak high, and above a weak high is liquidity. So price now comes in, creates a low which comes in, breaks this high, and also breaks this previous high here to make it a change of character. So this right here becomes our strong low, right? If you don't know what weak highs and strong highs, weak lows and strong lows are, there's a video for that. So you could just go and search highs vs lows, and that video will pop up, and all this is explained in there. So from there, what we had was a strong low right here, which is now our protected low. Price shouldn't get below this low here unless it's changing character, right? So we could just remove that, and from this low, we now have a break of structure or a change of character now from bearish to bullish. So there we have it. So we could just name it a change of character, and from this change of character, look at what happens, right? So price comes in, creates this high here, right? And from there, right, from this range, our area of demand that we want to see price buy from is this area here, this last sell to buy. So we're basically waiting for price to come mitigate this area, take our entries, and go bullish, right? So price comes down, leaves this low here, which what I would like to call a liquidity low, right? So this liquidity low, it's a low that doesn't yet mitigate the area, and there are imbalances below it, right? So price now comes in. So this is just simple inducement, right? People, once they see this high, this low, they would funnel into buys here and leave their stops below this low here, and then price would now create a high, and they would go okay, retracement. They would add buy positions here, and the stops will still be here, right? So price comes up, creates another high, and then comes down with a rapid move to take this liquidity here, as well as mitigate now our S&D zone. So let's just remove these. Boom. So now this is now our entry. This is now our entry, and our take profit target is so our first take profit target would be this high here. So this would be our first take profit target, and then if you still want to hold price towards new highs, right, you could still do that by taking partials along the way, right? So my overall take profit target was 100 pips there. So that's how price moved, right? So price just if we zoom in here, price just came mitigated this area here, right? Broke structure again, came down for more entries, right? Broke structure again, S&D zone, more entries here, and then price now gives us a runner with the FOMC news, and this is how we killed pound USD yesterday. So this became a total RR of 17.8 RR, guys. It's massive. It's a massive trade, guys. With that being said, I hope this video was very informative to you. Then if it was, don't forget to like, subscribe if you haven't, turn that bell button on for notifications. And until the next one, guys, stay safe, have a nice trading week, and of course, peace out.